Record to the cloud. Hi, everybody. Eric Mashinsky, Gold Investment Letter. I hope everybody's doing well here mid-July. Thought that it would be fruitful for us to get an update on McEwen Mining. Obviously, we've been long-term investors, supporters of McEwen Mining and Rob McEwen, and I just find it to be a fascinating time to zero in on this deal right now because it has been the largest new add-on position that I've made in a long time, just over the last 2 weeks, particularly since I saw, and we'll get into it later, an announcement by Rob about the McEwen Copper project and what will be likely a new spin-out company, an IPO within the next 12 months or so. I see huge value creation from that, which is of obviously great interest for us as shareholders. A cheap share price, a dormant gold market, dead of the summer when we love to buy some things and take a closer look before things heat back up and people wake back up. And so, Rob, it's been a little while. How are you?
I'm excellent, Eric. Thank you for asking. And yourself?
I'm doing great. So, I thought that we would take a bit of time today with regard to you just giving an update. We've had, after the Black Fox acquisition, you ran into operational problems and Gold Bar had some overruns and all these different things, which I'm sure make your day every day. Hopefully when they turn, they give you as much of an emotional boost as they do frustrations, because there's a lot of stuff to run. And I've been watching, out of sort of the corner of my eye, and obviously closely because it is a position of ours and a core position of mine, whereas I'm seeing and knowing that there would need to be some patience involved in the operational turnaround. That seems to be clearly kicked into gear now. So I thought, we could touch on, where the various mines are at versus call it a year ago. You put out a release recently about the actual production numbers versus a year ago, which look very, very good. We'll get into the McEwen Copper and we'll talk about all the different things that you may or may not have going on that you want to share with the audience, because it's a quiet time. And I really, in my opinion, one of the only probably value adds that I have in this area is I put things in front of people when the time is right. And I think that the time is right now for investors to look at McEwen Mining. So why don't you share, at least for some of those that are maybe a little bit newer, a little bit about the overall general story, if you like, and then we'll dig into more of the details.
Sure. Well, my own background, I started off in the investment industry, followed my father into it. And the first 18 years of my life was spent in research, sales, investment banking. Worked with my father, then worked with Merrill Lynch, and then went back, bought my father's firm out, and it was a Toronto Stock Exchange member firm. Did portfolio management, closed ends, and mutual funds, all focused on the precious metal space. And then McEwen Mining, I have to go back before it. I had a company called Gold Corp, and we went from a small company, about 50 million, to 8 billion. And after 19 years running it, I decided it was time to do something else and see if I could do it again. But before I did that, I started buying interests in junior exploration companies, because that's where I saw the big upsides. And I buy 10 to 30% of a company. And at one point, I decided to put two of the companies that I bought, where I had about 25, 26% interests in each of them. And there was a company called US Gold and another one called Minera Andes. US Gold had a pipeline of projects, principally in Nevada and northwestern Mexico. And Minera Andes had a 49% interest in a producing mine in southern Argentina. It was a high-grade silver gold mine, and it also had a very large copper project. And when we put them together, it was January of 2012, which was not a good time to put companies together because there was a lot of goodwill and prices were quite high. And we went into a steep descent as the metal prices fell and bottomed out in the summer of 2015. Today, McEwen Mining has properties mines in Canada in the Timmins area, which is a very prolific gold area. It's in Nevada, Mexico, and Argentina. So right now, McEwen Mining, I'll call last year part of the dark ages. We had operational issues. They didn't perform the way we wanted. We had to do a couple of financings that were inopportune in my mind in terms of timing and share price, but that they were done to prevent breaching covenants in our debt, and also to fund exploration. Again, I'm a big fan of exploration. Today, our operations are ahead of guidance by a small margin. Our treasury is filled up. We have some debt, and it was coming due in August. We refinanced it and pushed it out to August of 23. Our treasury is of a shape and growing that there's no longer a concern of breaching any of our covenants. And metal prices are up above where we budgeted them in our forecast. So that's our cash is 44 million right now. We're getting dividends from a mine in Argentina. We weren't last year. We're spending 14 million in Nevada and Timmins this year on exploration. Production is going up by 20 to 40% over last year. And driving all of this is a very important part of it, is we replace most of our senior management in head office and at the mines. And we replace them with people that have better attitude, more skills, and focused on improving margins. So I'm in a much happier state. Last year, it was hard to smile. This year, it's much easier to smile. It's going along. We have I'll call it our company's a little different than many in that I own 18% of the company, and my cost base is 165 million, and my salary is $1 a year. We trade on the New York and Toronto Stock Exchange, with the bulk of our trade on the New York Stock Exchange. We're a Colorado incorporated company, and have a number of large institutional investors. We also, because we had some problems last year, our share price was pushed down quite hard. And we're now in a period, a renaissance, but different than many other stocks. We always used to trade at a premium to the gold index, the GDXJ, from 2012 to about middle of 2019. And then we started underperforming. So if you look at how we've done so far, we're up over the indices since March of last year, and outperforming silver, gold, the GDXJ. But to catch up to where we were trading, there's still quite a bit of margin. And if you're looking at stocks that have some upside without the price of gold going, ours is one to consider closely. Our biggest value driver right now, I believe, is one of the assets that we have in our company is a very large copper project that we are putting into a separate company. Currently, it's in a wholly owned subsidiary. We're doing a private placement to advance the project. And there's a couple of reasons why we're doing it now. One, the copper price has doubled almost doubled in the last 14 months. So it's made the property more valuable. Two, our treasury in McEwen Mining is not large enough to spend the type of money to advance that's needed on this project to increase its value. And three, investors, at least from our standpoint, seem to prefer a pure copper play and a pure precious metal play, but the amalgam, given our size, is not what they're looking for. And we think we could get greater value by creating this company. We announced recently a financing where we're looking to raise up to $80 million and put it into the development of Los Azules in a company that we've called McEwen Copper. And the plan would be to take it public within 12 months' time, but first do work to upgrade its value and make it a more important asset, one mark to market for McEwen Mining and for our shareholders to see. Of the $80 million being put up, I will be personally putting up $40 million. And if we don't get a lot of that other 40, I'll still be putting up the 40 to drive it ahead, because I think there's a huge value opportunity. And if you think of the copper property for a moment, if you could think of it like real estate, and you buy a piece of raw land, now let's say it's rural, and you want to turn it into commercial or residential, you have to get a zoning change. And when that changes, usually the value lifts. And then you have to get permits to build. And when you get the permits, it lifts it again. So something similar happens in mining when you get a discovery, and then you come up with an estimate of how much mineral you found there. And then you put some economics on it. So it's moving from what we would call a resource to a preliminary economic assessment. Then you do more work on the economics, and you get more confidence in the estimate of the resource by further drilling and studies. And you have a pre-feasibility. Then you move again to a feasibility study. Each time you're de-risking the property by getting a better sense of what the economics are and the underlying asset. So we're raising the money to do exactly that. We'll be doing 53,000 meters of drilling. Of that, about 9 will be for geotechnical, metallurgical, environmental. And we're looking to build a mine that is really the model for the 21st century. Something that has a very low carbon signature, that low in energy and impact on the environment. But before developing that thought further, I'd just like to share with you some thoughts on the value, that re-rating I was talking about. So there's a chart I'll show Eric, but it's of since between 2010 and 2018, there were 12 transactions that dealt with large copper projects globally. And these were projects that there was no development on. There'd been drilling and some economics, but no mine had been built on them. So they're properties similar to Los Azules right now. And they range from just a resource, which is finding minerals and having an estimate, to what we call a PEA, or the preliminary economic assessment, graduating to a pre-feasibility, and then on to a feasibility study. So your lowest value is at your resource level. And then as you go along, it increases the PEAs. So in the resource, it depends on the year too, because there's a metal cycle when copper is hot and other times when it's cold. But it starts off low and it goes higher. The average for the PEAs was 2 cents a pound. And the average, well, the pre-feasibility, there must have been some enthusiasm, but it was also One was in 2011, the other was in 2018. Those were periods when the market was stronger. They were done at 14 cents a pound, and the average for the feasibilities were just over 5 cents a pound. Right now, Los Azules is valued at 175 million, which is equivalent to 0.6 of a cent. And if we can, through our work with the money being spent, move it up to 3 cents or 5 cents a pound, we have 29.5 billion pounds of copper in this project, 5.5 million ounces gold, and 191 million ounces silver. The gold and the silver are lower grade, so when it is mined, you'd only get about half of that. The copper in the PEA that we did was done in the summer of 2017. It envisioned a mine that had a 36-year life. In the first 13 years would be producing at a rate of 415 million pounds of copper. Yeah, you can do the math. If you multiply that by $4.20 a pound, that's a lot of revenue. The cost, and that would be positively impacted by the gold and silver credits that come, is estimated to be $1.14 a pound. So your costs are less than a third of your revenue per pound. Capital is 2.4 billion, and at $3 copper, it was modeled to pay back in under 4 years. The net present value was calculated at 2.2 billion at $3, and right now at current prices, it's over $5 billion. And that is on a post-production decision basis. So in other words, we have to get through to a feasibility study before that net present value kicks in, but that's at an 8% discount. So I believe that we can create a lot of money for McEwen Mining and develop this asset. So right now our goal is to drive towards a pre-feasibility study and then on to a feasibility. It seems to have awakened the interest in a number of, I'll say a few, large base metal companies. We've had approaches from long discussions with 2 now, but they were always coming in at lower values. And as I said, we had 2002 was a dark period for us, and I think they felt they could come in and buy it inexpensively from us. And so we're advancing it from here. There will be, so for McEwen Mining, with this issue, pre-going public, assuming if we raise just $40 million, McEwen Mining would retain 85% of the new company. And if we raised the full 80, it would be 69%. They'd also be retaining a 1.25% net smelter royalty, which is revenue right off the top line over the life of this mine. As it's a large capital project, we could see the interest of McEwen Mining being reduced as we brought in other partners. But we wanted to have a royalty on it, and I felt that was giving more value to McEwen. With this investment in this new company, my investment in the McEwen Group will be in excess of $200 million, my cost base. So I see this. We weren't getting a lot of traction, and I said, now's the time to do it. No one's willing to put up money. I'll put up money because I have a big investment in McEwen Mining, and I want to increase that value. And I see this as the biggest driver for McEwen Mining. Not to say that we don't have interesting exploration and expansion plans at our other operations, but this is a giant project and a rare one of the largest undeveloped copper projects in the world, not owned by a major.
Yeah, let me throw a few things at you, Rob, there, because I fully agree. When I saw this, I really got excited because I realized that, all it really takes, something like with what you're doing, number one, the check you're writing is obviously sizable. And then, like I said in the beginning, before we were recording, what that told me as well is I'm writing the check. And if you come, you come, you don't, we're still closing. So that is, to me, the attitude of, an owner who is essentially saying, I'm not going to rely on anybody else. I'm willing to put my dough up. And that speaks volumes, not to mention the fact that we have a 4 handle on copper, which I don't know if people really realize what that has done and what that does to, a net present value at 8%. And you move this to pre-fees, and then you start doing some NPV at 5%. And I don't know where copper is going to go. You can get into an inflation debate all day. It doesn't matter to me. What matters to me is that, even in the threes, this thing could be very, very attractive economically, and it's going to take time to develop. The question I would have off the bat is, with this other 40 million, has it been sort of an attraction, not promotion scenario? Meaning, you mentioned you probably took it out to some folks early, and then, they weren't really responsive. You decided, screw this, I'll lay it down with taking half of it. And then, from there, probably, from the response you got from the short list, haven't been really out there promoting, getting, other banks or other, funds directly involved. Have you had, is it fair to say it's become a bit of like, hey, take it or leave it? And how has the response been since you put that press release out? Have you had any traction with it, or is it just still people are sleeping?
Well, it started off by me just saying, if you want to do an IPO, it's going to take 4 or 5 months. There's a lot of work to be done to get the project up there. It might even take 6 months. But there's a season in which you can get into this property. It's in Argentina. It's in the Andes. You have to cross 2 high mountain passes before you can get to the property, and they become snowbound. So you really only have 5 months of the year, and since their seasons are opposite to ours, we're just coming into a period in the fall where you can get on the property. But you have to line up your drilling, because we're doing a lot of drilling, your other contractors, and they want to be dealing with a company that has money in the treasury that can pay them. So I said, we've got to move, so I'll put up the 40. And the board, I said, this is a related party transaction. You need to get a fairness opinion done. It wasn't really required, but I said, I want a fairness opinion done so that they're satisfied that they're not giving me something of value that our other shareholders aren't getting. So then we went out, and after they approved it, we went out and started marketing it. And I'd say the biggest reservation people have of the accounts we've approached, because there was a minimum of $2 million ticket to buy, was that it's private. And they wondered, well, when is this going to be trading publicly?
So
And
that
said,
means
well,
that you were marketing this primarily in Canada, because that's how Canadians think.
Oh, no, well, it was globally.
Okay.
We talked to a lot of accounts down your way.
Okay.
And just said, look, this is a straight issue. It's not through any broker. There was a 5% commission. Because I thought if I went with a broker, they're going to probably look for warrants, and they're going to want They want a lot of the deal. And I thought that we want to maximize the amount of money going into this project, but generous enough to them that there should be an incentive. But again, people are saying it's illiquid. It's an illiquid investment until it goes public.
So what are the incentives in terms of its Series B? Uh, I didn't really look. I didn't see the details. I mean, are there any warrants, or what are the incentives? Is it preferred in getting a coupon until you convert, or how is it
No,
set
it's
up?
straight common, no warrant. And it's starting off, it's $10 a share. It's valued at 175 million. So there's 17.5 million shares pre-financing, post-financing, fully subscribed, 25.5 million shares.
So I think
So
the only way you could really get somebody that would make sense then, because the kicker is when is it going public, and we're getting in at a pre, IPO sort of a price point, and then we could put all day long that this thing should be trading at, call it. I mean, you could say this should be at least 15-20% of the NPV upon, going public, something to that effect, and get a kicker by taking the private risk. So where does it sit? Have you had any additional interest? Are you seeing any of the tickets? People come to you and say, "Hey, will you take $500,000? Will you take $1 million?" Or have you had any like lead investor that was a straight investor that's known you for a while and just said, "Okay, I'll put in a few bucks"?
well, the day we put the press release out, I was off seeing a doctor about my shoulder, which we were talking about earlier on. And I was walking out of my appointment, and walking in was a friend of mine. And he said, "What are you up to?" And I told him about the press release. And he said, "Oh, well, put me down for 2 million." And then half an hour later, got a phone call from someone, said, "Put me down for the same." We were working on two accounts that seemed very interested in doing much larger tickets, 10 and $20 million tickets. And it was interesting. They go, "Oh, well, we're very interested and we're here. Here's a condition and then another condition." And each time you almost had a deal, they'd say, "Well, here's another condition we want to put on." And after a while, we just said, "Look, it's not going to work.
Yeah.
You're going to come in this week. You can look at the history, and through weak and strong markets for copper, here's the price history. Here's what happens when you move from the stage we're in to the more advanced stages. There is appreciation. With the money, we're going to improve the access uh, incredibly. Right now, I said it's 5-month access a year if you're trying to drive in. I've been wanting to have an airstrip put in and get permission from Argentina, and they're starting to say, "We'll give it to you." There's a new road that we've just started construction on that should give us 12-month access. It's lower altitude, snow's not an issue. We've got a route mapped out across the border to the Pacific through Chile. And we're just moving ahead. So you improve the access by air and road. You improve the confidence in the resource by more drilling, infill drilling. You get the studies, you get the permits, and we're at a point where we can sit down and talk to a big company with lots of experience. But we're designing a mine that we want to be a model for mining going forward, that it embraces the ESG as much as possible, and is just, as I say, a place that you want to compare everything else to.
And so you will have do you have a drop dead date on this offering? And then what will, say like you have 40, let's just use your 40 as an example. What do you plan on spending in the season? And then will that get you, I'm assuming the pre-fees, could you get it done all in one season?
Um, No, the pre-feas is probably going to take to the end of next year.
Okay.
Yeah.
And then a drop dead date on the offering where you say, get in or it's done.
Well, we'll close the first 40 at the end of this month,
Okay.
and then we'll leave it open for another 2 months.
Oh,
After
really?
that, we will have done more. I mean, if someone comes along and wants to do it, the price is gonna start escalating as
Right.
we advance here.
Yep.
Um,
Okay.
I'm not gonna let a door stay open because we will have really moved it forward.
And so it's a pretty aggressive plan then starting this fall, which is really going to open up their spring summer. And then with regard to the Elder Creek, which you threw in there in Nevada, I'm a little bit familiar with that project actually, but what are your thoughts on Elder Creek? Because I don't know if you recall, but being a big shareholder for years and Timberline, who had an option for a little
Yeah,
while on that,
I
yeah.
did.
So that I looked at it, watched some of the development, and those guys were very excited about it. But they're not really a deep-pocketed company to do the type of work that needs to be done. So, what are your thoughts on Elder Creek?
We're gonna spend $2 to $3 million over the next year and a half on it.
Okay.
It's an interesting looking porphyry style deposit. It's copper, gold, molybdenum. It's right next to the Marigold mine. It's right in the heart of one of the best mining districts in the world, Nevada. So it's
And
land.
what about other projects either like this or maybe it's even a brownfield type of situation that are out there? Are you looking to add, or do you want to just stay focused on maybe you got a flyer or two on the exploration side closer to home like Nevada, and then you have the Los Azules, which in and of itself is a behemoth.
Yeah, I mean, as I said earlier, Eric, we're spending 14 million on our two properties, 9 in Timmins and 5 in Nevada. And we think there's a lot of potential there, both near surface in Timmins and at depth. We're in two great districts for gold.
Sorry, I was actually referring under the copper umbrella on
Oh,
that
under the
question.
copper? No, I just thought we have two shots on goal. One's Elder Creek, it's earlier stage, and I think there's an open net when we're shooting at the Los Azules.
Yeah, and I'll just one or two more on Los Azules and McEwen Copper, and then we'll revert back to the gold projects. But so with the strategics or potential buyers or whomever you've been talking with recently and over the years, I mean, this thing it is so big. It is, the economics are exceptional in this type of an environment for copper. You do have challenges that I think the way you're approaching this with just access is huge. What would you say are the biggest areas of resistance? Is it the stuff that's obvious, which is like, look, this is a big project and copper really is just woken up to the degree where people feel like it's real, I mean, this year. So that also, I think we'll see some legs with that in the sense that companies will be more motivated to get things like this under their umbrella and or a stake or what have you. Has it been a function of the market combined with the size? What would you say has been the lack of closing something in terms of a partnership?
Well, first, just about the copper project or copper in general. There's been a shift in politics in South America. Peru and Chile are big producers of copper, and their politics have moved very much to the left, talking excess tax, higher taxation, and even outright nationalization. So there were projects there that some of the seniors are looking at and having a second thought as to whether they want to put more money into those countries just to maintain production, let alone expand production. And Argentina, that had a question mark around it for some time, is looking at as a more promising destination. So people that have come along are some of the large base metal producers. As I said earlier on, we had extended discussions with one group about a year and a half ago, and I didn't feel their price was attractive at all, nor did the board. And they wanted to buy 100% of it. And I'd have to say every overture we've had from a senior has been, well, we don't want to give you a royalty. But if you're a junior trying to cut a deal with a senior, they always want a royalty. But none of the seniors wanted to give us a royalty. And I thought that was a key point to keep a hold on that revenue stream. I mean, if you were to look at a royalty, if our mine was in production at current prices at 1.25%, it would be providing a little better than $22 million a year in income. If you had 100%, which would be a dream, at $4.20, you're almost 1.8 billion in revenue. I mean, this is a big project, big property. So the seniors have been there. When we put the press release out that we're going ahead, there were a couple of inbound calls coming from different points of the world, saying, well, can we get into your data room and take a look at it? We're not particularly waiting because we don't want to lose this window of opportunity to get everything organized and moving ahead. And we do want to see a value move there.
Yeah, and I mean, my attitude is like, as a shareholder of McEwen Mining, lock them out for a year. Let's go do this work. We've waited this long. Let these guys all wake up to the fact that they're going to pay up, for the low ball offers all these years, and also even just with other projects, with has now become sort of a brand moniker from my companies, which are called, Phenom Ventures, Phenom Foundation. My dog is named Phenom. Phenom Capital has gone to now Phenom Resources, which we both invested in, First Vanadium Corporation. And so deals that are very, very heavily involved in my portfolio, my message to those CEOs, and you already have this attitude, but you're rare, which is that, we're surrounded there at our Carlin project by Barrick Newmont. And, my message to the CEO there and with other juniors that I support that for years have been getting these insulting offers on projects. Because you know what, guys, get out of here. Shoo. We're never, ever going to run out of money. We have absolutely significant and loyal shareholder bases that are able to continue to keep us going. And until you want to bring us something respectable that reflects the value of our projects, please stay away. So, I think that here is kind of, you're in a really good position, right? Because, you've got plenty of dough, you're funding this round. We've had to be patient, we know about that. So I'm really excited about it, Rob. I think it was a huge move. I'm absolutely convinced it is going to unlock a lot of value. And I think even in the shorter term, we're going to start to see something to the effect of, for example, even if we have a tepid gold price and the base metals start moving, copper, going into the fall, you're going to get a lift directly from that. Absolutely, because this is big enough. Why don't we just circle back to I'm looking at your press release from July 13th on the production results. Obviously, your gold equivalent ounce production Q1 was still down just a tad from 2020. Q2, however, was more than double. And then, so those are the first half numbers, about 71,400 gold equivalent ounces. And then the guidance being anywhere from 70 to 80, call it 1,000 gold equivalent ounces moving forward. My question is regarding the second half, what do you see, and what do you see versus what was the second half of last year? Is it going to be that moving up to the right, similar to Q2? And then if you'd like, it would be great to hear a little bit about, perhaps you could dive a little bit under the surface on Black Fox and Gold Bar, where there were the biggest sort of challenges with production and costs in the last couple of years.
Yes, certainly. Well, I'll deal with Black Fox, or it's an area now we're It's part of what's called the Fox Complex. It's located in just outside Timmins, Ontario, Canada. It's a very prolific gold district located on a geological feature that's referred to as the Dester-Porcupine Faults. And along that, there's been well over 100 million ounces produced over the last 100 years. We've got 3 property packages there. We mine at Black Fox, and we've just started development of our Froome deposit, which is about 3,000 feet away from the workings of the mine. And it's a more, we're expecting more out of it. It's shallower, so the logistics are better, moving material around. The ground is more competent or more stable, because it's shallower. The widths are larger, the mining widths, so your mining costs can be lower, and the grade is more consistent. So it's shipped, trucked over to our mill, which is about 25 miles away. So Froome will be reaching what we would call commercial production rates in the fourth quarter. It'll run for about 2.5 years as we currently know it. And during that time, we're developing at our Stock property, which is where the mill is. There was a mine there back that was operated about 15 years ago, last operated 15 years ago. It didn't go very deep. The grades were around 5 grams or a little better. And we've been exploring on this property for the last 2 years and become quite excited about an area we call Stock West, which is about 300 meters to the west of the workings, underground workings. And we found wide intercepts of good grade. And what we're working here and the other property, Gray Fox, we call this the Fox Complex. I might like to rename it the Wolf Complex, but Fox seems a little small right now. But it's we're looking at an expansion plan that could move the production up to 100 to 150,000 ounces and give us a 9-year life between Froome, the Stock property, and Gray Fox, where we have over at Gray Fox, we have 1 million ounces to find right now. So we were hoping to have the preliminary economic assessment out in by the end of June, but we added a couple of aspects to it. So now we're looking later in the second half of this year. We're spending $9 million here, and it's just been a good project. In 2019, 2020, we had some mishaps. There was a fire at the Black Fox mine. It destroyed the crusher that was run by a contractor and interrupted our cash flow for 7 weeks. We had no revenue, but we had lots of expenses. There was a heavy spring runoff last year, and it flooded the mine, one side of the mine, which was a problem for a couple of other mines in the area as well. And that was another interruption of revenue. And the Black Fox mine, when I bought it on these properties back in 2017, my first thought was to shut them down, because the miners were basically right on top of the geologists. And I have to say, my finance department said, oh no, why don't we run it, because there's a cost associated with closing it. But I looked at this very much like when I was building Gold Corp and the Red Lake mine, which was the heart of Gold Corp. It was a mine with a short mine life, high cost, and not much of a mine plan. And we went and spent a lot of money on exploration. We also benefited from a 46-month long strike where we weren't doing any production, we just explored, and we were able to put a very comprehensive mine plan on the property, and we had the benefit of finding a lot more gold. And Black Fox reminds me a lot of that. We have a high grade, quite high grade in some cases. They've been over relatively short intercepts, a meter or two, but you just got to piece it together. And that's the puzzle we're working on right now there. At Gold Bar, we started up the mine, and Gold Bar is located about 25 miles south of what is called Nevada Gold. It's a joint venture between Barrick and Newmont in Nevada. This is one of their biggest gold mines, and also the site of some pretty spectacular discoveries over the last 10 years. So we're on the same geological trend. We have two property packages, Gold Bars at the bottom. We had a resource estimate done by an independent firm, and it was the basis for our feasibility study. We went forward, built, and then a year after we were in production, we had the same group come back and look at the model, and they said, well, it's wrong. And they basically said you have fewer tons and fewer ounces of gold. And we started scrambling. Our production was down, and we did about 50,000 meters of drilling. We came up with a new feasibility study. Currently, it has a 6-year life as we know it. We believe we can expand it with exploration, and that's part of the $5 million exploration program. And we're drilling on the property that sits between the Gold Bar mine and the Barrick Newmont property, which is called Tonkin. It in its own right is large. We're talking almost 100 square miles at Tonkin and 50 square miles at Gold Bar, just down from one of the bigger gold mines in Nevada.
Now, has anything been done at Tonkin so far under your umbrella, Rob, or has that there been under the umbrella of U.S. Gold back in the day? Or
we're drilling on it right now, Eric. We have 2 drills there, RC drill and a reverse circulation. There was a resource there. There's a resource of 1.4, 1.5 million ounces. About 60% of it is refractory, meaning it needed secondary processing. We're drilling on a site that we believe we're looking to confirm if it's all oxide, and we could truck it to Gold Bar. It's a couple of 100,000 ounces of gold in a estimate right now.
okay,
So that would extend the life of Gold Bar nicely.
so that Tonkin area, percentage-wise, out of the exploration budget with Gold Bar, is that
40% right now.
okay? Super.
And we're also drilling on we picked up a property next to Gold Bar, and actually it was called the Gold Bar mine property. It had a mill on it that was sold, and it was open pit mine, but it was milled. So it was higher grade than what we're seeing at Gold Bar. So we're drilling there to see if they left something behind.
That's great. One question I have for you, Rob, is that, you mentioned the Minera Andes days and the 2012 merging and transaction, but I remember, you sort of came onto my radar back when I was a broker. It was, what was it, 2006 or 7 when you took US Gold public with the rolling of, what was it, a roll up of a few different assets and companies. Over this period of time, I'm just wondering, how many more of whether it's an Elder Creek or a Tonkin or some of these greenfield, brownfield assets that maybe are still on your books and you like or have value, but they just haven't been the priority. How many of those are around? Because you probably have more than we see. You don't focus on maybe some of these that are not being acted on, right? So do you have like a tranche of stakes under the McEwen Mining, whether it's the properties themselves or even stakes in, if they're small, other companies and entities that might be earning in, like we had seen with that Elder Creek deal before?
We joint ventured a property to Limousine Butte and Cedar Wash. The names don't mean anything, but they're Nevada properties, to a company called Boney. They paid us $500,000, $600,000 in cash, and we own a little more than 10% of it and have a royalty on the property. And there are a few other properties we're sitting on, just waiting for a better day. We have
Yeah, it makes sense. I mean, it makes sense, but it could actually, the reason I ask is because, you liked these projects or properties at some point for a reason. And I find this in a lot of cases with talking to different geologists or whatever in different areas, and they've had stuff sitting around for a decade or more, under their own holding, because they just really liked it, but the markets haven't been kind enough to say, hey, let's go out. We've got all this excess cash flow, whatever it is, to do it. So it's just kind of nice to know. You say a few. I'm guessing it's probably you have, I don't know, at least a few. I think of a few as 3 or 4. Maybe it's half a dozen of these that are there, because for other juniors, this would be like a couple of these would be entire public companies, right?
Yes. Well, I definitely didn't expect us to be where we are today. 2020, our revenue was 30% lower than 35% lower than what it was projected to be in our budgets. It was $70 million less. And we're supposed to be well funded.
Right.
We're getting back to there, but there was some opportunity cost in terms of timing and doing things in the marketplace. So we have properties in and around Timmins as well that we're
Right.
looking to incorporate into the expansion plan. Yeah.
Okay. A couple of few randoms for you. And then I think as far as your numbers going into the second half of the year, your all-in sustaining costs across the board, are you cash flow positive going forward, or what are you looking at?
We'll be releasing those numbers in August.
Okay.
But we were green.
Green. Okay. That helps. That's better than red. What have you done to navigate this environment where there's just simply a lack of drills and drilling crews, at least around the Nevada area? It seems to be brutal.
It is. Not only is that impacting exploration and production, its assay labs too are way backed up.
That's my second question. So do you buy into the make sure you're paying a premium for the time value of money to get your assays back, or do you just pay the flat fee and wait?
It depends on what comes out of the drill core.
Okay.
If you're expecting a hot hole, you're going to pay a premium to speed up getting the results.
Right.
If it's just expanding it and you have a good sense of what you're getting, we'll wait our time. But we have been moving around from one company to another. We're actually operating with several assay companies at the same time, because there's a real, as you said, there's a real crunch out there. It's amazing how much the system is unable to deliver on a timely basis.
Yeah, and most people don't even think we're in a bull market. I think we're in a subtle one, but wait till things really start cranking. Somebody's going to end up launching an impromptu new drill company or two, and I mean, but then you have the training issues. You ran into that at Gold Bar too, right? The staffing, with people that are capable, and so it's interesting. So, but you've got your drilling, I would assume, both up north as well as, I mean, Argentina is a different animal, but you've got Nevada, you've got Timmins. I would assume you have those contracts locked in, and or feel confident that you can get those crews in a timely basis when you already have them.
It's really the crews. I mean, we know of some companies have drills, but they don't have drillers.
Right.
People left the industry in the last downturn, and they're not coming back. And some of these jobs, they're tough jobs, and there seems to be subsidized wages or free money
Right.
that are keeping people from coming out.
Right.
It's a challenge for the industry.
No
Definitely.
doubt. So real quick on a couple of last randoms are when you release, do you have a certain sort of formula you work with all, because you're doing a lot of drilling, a lot of exploration drilling this rest of the year. I'm sure you're going to do a ton next year. And I remember seeing the like big clumps of assays come out from the Fox complex, and I would encourage you immediately to change that to the Wolf complex. I like it much better. But how would you typically release batches? Are you looking at, because you tend to, some companies that are smaller, they'll release a hole, they'll release 2 holes. You'll come out and release maybe 12 at a time or something like that. Bigger companies will release even more. How do you see that playing out? Because I think that, depending on what's happening there, and in a bit of a bit better environment, in the sense people see a turnaround, they see the McEwen Copper coming, you could, with repeated sort of good or decent or exciting exploration results, catch a little fire at some point here, just by seeing that that's consistent.
I believe that's the case as well, Eric. Last year, we were beset with the operational challenges, but we were putting out good exploration results, but they were overshadowed by the operational issues. But I don't think you can get away, unless it's just just an incredible hole, putting out 1 hole when you're a producer.
No, right.
I'd still be wanting to see, you put out drill results and it's either you're getting a new discovery, marks a new discovery. Here, we're doing a lot of near mine drilling. I'd say if we split our money out, it's probably 80% near mine to work on extending the lives of the mines, and 20% outside, looking for targets that could have a big impact on the future.
Cool. Perfect. Last question. Your institutional and research sales backgrounds, are any of these days you've had this offering open, either prior to today or going forward being theoretical, have you felt like, you know what, I'm going to put that hat on and start smiling and dialing and calling these guys up and shoving this thing down their throat because it's going to do them well, and get that going again? Because you know what, it could be fun, not, you know what I'm saying, not shoving it down their throat, but getting out there and say, hey, I'm calling you for a reason. I haven't called you in 10 years. Like, look, I'm fired up about this thing, and see what you could put for points on the board, because I bet you could do it quick.
Yes. And I mean, if you look at it, there are a number of ways of looking at this copper deposit, say, that we have. And you could say, if you take today's copper price and today's gold price, and you see it takes about 420 pounds of copper to equal the value of 1 ounce of gold. If you use 420 and you divide it into 29.5 billion pounds, you're looking at an equivalent gold deposit of over 70 million ounces.
Wow, that's a great way to look at it.
And if you look at the results from the PEA that talked about producing 415 million pounds of copper a year using the same divisor, you're at just under 1 million ounces of gold annually for the first 13 years. And at a cost of $1.14 a pound, you'd multiply it by the same 420, and you're coming in at under $500 cost. I mean, just to give you a sense of the size, and this is a mine with a 36-year life.
It's incredible. It's incredible. And I think that's what I was hoping for out of you. I mean, that is why you're putting 40 million in. You're not just going to do it because you want to keep things rolling. I mean, this is extremely compelling on the economic side, but I don't think people look at it that way. And so when you're talking about a 70 million equivalent, and there's a lot of room for growth here, I assume too. I mean, but not that you need it.
Well, porphyry deposits, porphyry copper deposits tend to occur in clusters. So yes, there's likely growth. A good portion of the drill holes ended in mineralization. So, we had grades up. I have a little, maybe I have the only part that ran that, but it ran 5% copper. It's a segment of drill core. That's a lot of
Wow.
copper.
Yeah, no kidding. What I'll do here, Rob, I'm going to say thanks very much and stop the recording portion. I'm sure this is going to be awesome for a lot of our holders, and for those that aren't involved yet, get them excited as well. So thanks so much for the time today on that, and I'll pause our recording here after you say goodbye.
All right. Thank you, Eric. Pleasure.